The Ready Set Grow podcast is sponsored by Ag Expert, software designed for Canadian agriculture. Visit them today at agexpert.ca. Welcome to the Ready Set Grow podcast, where we like to showcase startup and early stage companies, as well as visit with innovators in the agriculture and food industry. Today, we're here with Joe Dales, co-founder of RH Accelerator, and guest Eric Bosveld, president of B&A Corporate Advisors. Eric, thanks for joining us today.
Well, thanks for having me. Really appreciate it.
Could you just tell us a little bit about yourself, please?
Yeah, sure. I've been in the food and agribusiness industry my whole career. That's just kind of getting in around 30 years now. So kind of later stage of my career. Started off my first third of my career really as an agronomist, actually working out in the field with farmers and dealers and their crop input programs. I have my BSc and my MSc in plant science, so that was kind of my career direction after I graduated, which was a great foundation for the next 2/3 of my career. Then I spent the next 10, actually 13 years in the agri-retail sector, kind of working my way up through the ranks, ending up as the general manager of the Agrimart Group, which is an agri product distribution business here in Eastern Canada, now owned by Le Groupe Fédéré, and left there in 2011 to start doing full-time M&A work, mergers and acquisitions. First of all, kind of got going with a number of different private equity groups, working on the buy side, helping them kind of stay between the ditches. So with using my operating experience to try to help them assess businesses, identify opportunities. Since then, it's kind of evolved a little bit. Now I do some more sell-side representation in the mergers and acquisition space, in the food and agribusiness industries. My firm is based here in London, Ontario, so I'm not far from RH Accelerator. And of course, I've known you for many, many years through various stages of my career. But we're a boutique lower middle market investment bank. We primarily help companies that are in the food and agribusiness space either acquire other companies. I'm working on a project right now today that we're helping a U.S.-based company acquire a company here in Ontario, but I also help companies prepare for a sale, eventual sale, and then represent them and run a competitive process. And we'll talk a lot more about that. But that's kind of me in a nutshell.
That's great. We really appreciate you coming on. We don't see too many corporate finance folks in the agriculture and food space. So this is why we wanted to have you on the RHA Ready, Set, Grow podcast. So can you discuss a little bit about the process of what you do and how you help it? And let's just say on the sell side. So I have a business, I'm interested in raising money, mergers, acquisitions, something, at transaction. Right. So what would you do and what value would you bring to my team, and describe the process a little bit?
Yeah. So the first thing I want to do is distinguish the difference between raising some capital and exiting an M&A process. Because they're really, although there's some of the principles are the same, we would apply some of the same principles. It's really it's a different ball game altogether, quite frankly, in terms of the type of people that you're actually approaching and how you go, the challenges that you face. I'll say it that way. So raising capital is just something that does take some specialized expertise, and it's not something that I've done a lot of. If you're an earlier stage business, a kind of seed, or even an established business with revenue, but kind of are less than $10 million in revenue, so let's say less than 5 for sure, but $5 to $10 million revenue, it does require a network that's a little bit different than the network that I tend to circle in. So So I'll kind of emphasize more the exit stage. Companies are already now established. They've got an operating profit. They've built the business into something significant, and now they're either late stage of their career or they're looking to bring on a partner, maybe a financial partner like a private equity firm, to kind of bring the business through to the next stage. You think of, and of course you'd understand this. I mean, if you think of growth, it sometimes is in steps, right? As a business owner, you run into certain barriers, whether it's capital or talent or attracting new markets or some combination of the above. Sometimes mature companies get into those stages, and they need to bring in a private equity group, which usually will take a controlling interest, although there are some that will do minority positions, but usually will take a controlling position. But they may invest more capital in the business to accelerate the business. So those are the types of engagements I would typically pursue. Is more on the exit stage. So as far as the process goes, it's pretty extensive. And if people haven't actually experienced working with a professional M&A advisor or an investment bank, either through their a previous role at a larger corporation, there's an awful lot of education that's required. The first real big thing is, before you go to market, is what I call polishing the apples. And that's really a big focus of BNA Corporate Advisors, is trying to build relationships with potential candidates or clients well in advance before they're ready to kind of pull the plug and say, okay, let's put this thing out in the market and see, how we can attract a competitive environment where, multiple companies will bid competitively to have the opportunity to work with me and my management team and take over majority ownership of the business. So that polishing the apple stage is really, really critical, and that lead time that you need before you actually engage with an M&A advisor like myself, can be really short if you're ready, but could be easily a 1 or 2 years, and that's a big area of the focus that I have. So I love to talk to entrepreneurs, 1, 2, 3 years before they're really at that stage where they think they want to pull the trigger, because there's a ton of things that can make your business not only more valuable if you take a few steps, but also more marketable. And if it's more marketable, that means there's a larger pool of potential buyers. That means there's a better competitive process and more likelihood that you'll find and get a good outcome. But the process from engagement to close, that's also a multi-step process. You got to prepare the marketing materials, what we call the teaser, the confidential information memorandum. That includes all the data analytics around your customer base and history, customer turn, your supplier relationships, your differentiated market position, and actually the financial models in terms of how the business actually is going to look and how it would be perceived by a potential buyer. So that's a big chunk of the first, say, 1, 2, 3 months of an active sell-side engagement. And then there's the actual in-market process where we, on behalf of our client, would go out and actually get the confidentiality agreements in place with the potential buyers. Once they've negotiated that, send them the marketing material, do all the Q&A, up front. The main focus of this in-market period is your management team's not getting distracted and answering questions from all kinds of different potential buyers. Like a good, broad, competitive process might include 300 potential buyers. And you can imagine, that takes a lot of resources away from managing the business. And so our team kind of comes beside the management team to kind of take all that initial Q&A off of the owners or the management team's plate, get it narrowed down to a handful of manageable potential buyers that have now given initial offers, and then working through that to narrow it right through to close. So yeah, long answer, I know, but you got the kind of really pre-engagement stage, the marketing stage, in market, and then the close process using that competitive tension between potential buyers.
Awesome. One area we've noticed at RHA that can be a big issue for companies is valuation. Can you just take us a little bit through your valuation models?
Yeah, sure. Well, it's something. I just wrote a blog article on this and put it on LinkedIn. So there are a bunch of myths out there that I constantly run into with entrepreneurs in terms of their understanding of how businesses are valued. The reality is that there's a ton of different ways to value a business. Not all of them are appropriate in every situation. But what people really need to understand is the value typically is perceived by a potential buyer. It's going to be different depending on different types of buyers, and what the future is dependent a little bit on the future cash flow of the business and how it's actually going to flow into the new ownership. If it's a standalone business, that can be fairly straightforward. It just means buyers have to buy into the plan, the projections. We've typically see the hockey stick projections, which has limited credibility with potential buyers. If you've been bumping around the same kind of sales and earnings, for the last 4 years, why are in next year you're going to grow sales by 20% in profit? You have to actually layer in the specifics, actions, and the initiatives that you're going to take, and they need to be credible before buyers are going to look at those potential projections. The past is probably one of the best predictors of what future performance is going to be. And so if you've been growing at 10% a year, then a buyer is going to be much more apt to believe, especially if you've been able to demonstrate the exact actions that you've been able to take and how well they've worked. That might be potential on how it goes in the future. So basically, there's some type of discount of the future cash flows as the primary way that a business is going to value. They may layer in some of the additional synergies that the business might have if it's a competitive process, and they may share in some of those synergies with the seller to make sure that they actually are the successful candidate. But in the end, all the valuation modeling, all the look at precedent transactions and comparables is only a starting point. The real market is when you run a competitive process and you actually get real bids coming in from real companies that are ready to write a check and go to the bank and borrow the money. Is really where the true valuation comes in. But amazingly, we typically will find that we've done a lot of work up front and done that proper preparation is typically within the range that we would project.
That's interesting.
We always hope for when we're representing the seller that we get that outside offer that is outside of the range, and it happens. But typically you're going to get more of a cluster within a range because they're going to be using some of the same assumptions.
Yeah, no, it's I think the key thing for most entrepreneurs to realize is there's a definite information process here that, the more work you do and the more you articulate the future for the potential buyer, the more comfort they have in the valuation and closing a deal. So, no, that's great.
Absolutely.
Question for you, and I'm not sure why this is, but I'd like your thoughts on it. We don't seem to have too many public companies in the agri-food space in Canada. We've got the Toronto Stock Exchange there, where Bay Street, we've got a lot of financial firepower for like the mining industry.
For sure.
What's your perception on using IPOs? We've got companies out there like Devron that have done this successfully, and I saw today they raised another private placement. So it would seem to me that we have this great resource there, the public markets, but we don't use it. What's your thought on that, and why?
It's a good question. I don't know that I have a real good answer for you, Joe. Tell you the truth,
Hmm.
for sure there are stock markets that build reputations to having specialization in certain areas, and if you want to raise money in oil and gas and mining, TSX is a great spot to go. Food and agribusiness just doesn't have that same. I don't think there's really the same situation on any of the public markets, quite frankly. I mean, the industry as a whole has a whole bunch of large mega companies that are international in scale, right across the whole food and agribusiness channel, from the Cortivas of the world to the um, Del Montes, and all those types of companies. But there's a ton of, I kind of think of it as a bit of a barbell. There's these big mega companies on one end that are publicly traded, and then there's a ton of small, tiny companies, on the other end. And there's a little bit of scarcity in what I would call the middle market. Companies with 100, 2, 3, 400 million in revenue that are profitable. And those ones, if there were more of those companies, I think likely there would be a bigger representation on the public markets, because you certainly, if you're $100 million revenue business and profitable, and you've kind of got some of the sexy on trend things, whether it's plant-based technology. I mean, there is potential for a lot of those companies to use IPOs as both a mechanism to get some liquidity for the founders and the shareholders, but also to get access to more capital to grow quicker. But I think this is my perception, and I'd love to hear from other people that may be watching this on their opinion on this, because it's just my opinion. But I think it's because there's a bit of a scarcity in the middle market in the whole agri-food sector, maybe unlike some of those other industries.
Yeah, and I think the finance industry hasn't really focused on agri-food. We haven't darkened the doors at Bay Street like the mining industry has.
Right.
I just
Right.
see the mining industry so hit and miss. And
Right.
the cannabis industry, I guess, the market was made in Toronto because of the US
Right.
slowness, and all of a sudden we've got public companies. I know they got over, they did the .com thing. They got bid up crazy valuations.
Yeah. Yeah.
Now they're right sizing. They're becoming real businesses, but they did have access to capital, and they do have liquidity with the public markets. So it's an area where I think agri-food can go and do a better job. And I've seen a few companies, as long as you have growth in earnings, it's more frictionless today than ever before to buy stock and sell stock and communicate and so on. So it's an interesting area that I think is undeveloped, but maybe we should be looking at. Any other questions, Mike?
Yeah, so I guess, Eric, you get to see a lot of interesting companies. Do you have any advice for young entrepreneurs?
Yeah. Well, my advice would be to think very early on really what is your core purpose of forming your business. I mean, there's a wide range of reasons why people start businesses, try to grow the business. But if one of the mindsets that you should really consider as one of the potentials is kind of, are you building the business to sell. And if you're building the business to sell, there's a lot of things that you really should be doing all along the way that really can make a big difference. And if you think through those aspects on your, and how you incorporate that into your day-to-day decisions, that's certainly really important. But there's lots of people that, build businesses for many other reasons. It's just try to be clear what your end game is. I think can be really helpful. There's a ton of entrepreneurs out there that just love building businesses, selling them, starting another one. Those guys kind of watch what they're doing. If that's what your end game is, boy, you can learn a lot from seeing some of those entrepreneurs. And I'm sure you guys have got tons of contacts of people that could be helpful in that area.
Yeah, and it's exciting to see these companies, grow, and we try to get them investor ready for their next round. So, kind of following that Y Combinator model and move them along. And I agree with you. It's a process. It's it's a mindset. And we're excited about that.
Absolutely. Yeah. That would be the main one for sure. It's in some ways I'm a 9-year startup since I left the Agrimart Group in 2011. I mean, I've been kind of had some phases. It's kind of reinitiated over the last 8-10 months because of COVID-19 and my relationship with the investment bank that I work with in the U.S. But I'm not really building a business to sell. I'm trying to build a business to generate some revenue, and it is quite a different mindset for sure.
Yeah. Thank you, Eric, for sharing that information. Before we head out, is there anything else you want our viewers to know?
Well, just look for people, like Joe and you, Mike, to work with. I think what you guys are doing is some excellent work here. It's great for London, Ontario. Being based here, I often get lots of comments that, hey, I didn't know anybody in London, Ontario did, full-time mergers and acquisitions advisory. And it's the same thing with, some of the stuff that you're doing. It's an exciting time for ag and food tech. Love paying attention to what you guys are doing and being part of the community. So happy to have conversations with people at any stage of their business. And if I can provide a little tidbit of information that's helpful, then that's a great outcome for me.
How can our listeners connect with you?
They can easily go to my website, www.bacorporateadvisors.com. You can look me up on LinkedIn, Eric Bosveld. Sure, I'll come up there and send me an invite. Happy to connect, and that's or you can call me on my phone, 519-709-1783. You can't forget the old-fashioned phone.
Yep. Eric's got a great newsletter too that comes out to for business owners and directors that are interested. So encourage people to send him a note and get signed up with that. He shares in-depth articles on the process and on valuation models and so on. So I enjoy reading that, Eric. So thanks for sending that out.
Excellent.
And I just wanted to thank our listeners for tuning into the Ready, Set, Grow podcast. And I just wanted to thank you again, Eric, for joining us today.
Appreciate it. Thank you.
Bye.